Hello and welcome to this Sole Trader Tax Update Spring 2026. Now, we've just started a new tax year and we'll soon be starting to prepare 25-26 tax returns. So this is a good time to recap some recent changes which could affect sole traders and the work we do on those returns. So what am I going to cover in today's course? Well, I'm going to start out by setting the scene with some key rates and allowances for 25-26. So what are the tax rates we need to know about? I'll then talk through some upcoming changes for 25-26 and 26-27. We'll have a little bit of a capital allowances update and look at some changes that have happened recently in that area. And then have some key reminders about tax deductions. So what can and can't we get a deduction for as a sole trader? We'll then wrap up by having a look ahead to some upcoming changes down the line. So we've got a mixture really in this webinar of new things and not so new things, but very important. Let's kick off with the new bits and revisit what the rates and allowances are for both 25-26 and beyond. So not a lot changing when it comes to income tax rates and bans in England, Wales and Northern Ireland. The bans have been frozen now for some time and are continue to be frozen out as far as 2030-31. So on the slide you can see now what I've done is put up what the personal allowance is, the basic rate, the higher rate and the additional rate. Those are from 25-26 all the way through 2030-2031, and they are not changing. These are the rates for non-saving, non-dividend income. Now, we did have some changes announced at the budget around the tax rates that apply to savings income, dividends and property, but I'm just focusing on the sole trader, the sole trade work rates here. So those rates have actually been frozen, as is the personal allowance, for some time now. This is something called fiscal drag, and it's a favourite of both this government and the last one. The idea being that if you freeze the rates and the thresholds and the allowances, and people's earnings increase, more people are brought into paying tax and tax at higher rates. So it's really a way of increasing your tax revenues without putting up headline rates. So the personal allowance for 25-26 through 2030-31 will remain at £12,570. Everybody gets that unless their earnings are above £100,000. So for every pound that our net income goes over £100,000, remember, for every £2 it goes over, we lose £1 of our personal allowance. We get that steady taper. So by the time we get out to just over £125,000 of net income, we've lost the personal allowance. The basic rate band comes in after the personal allowance, so all the way up to 5270. That is taxed at 20%. Then we've got a higher rate band from 5271 up to 125,140. That's the 40% rate. And then the highest rate we have at the moment, the additional rate of 45%, which kicks in from 125,140 upwards. So really nothing much happening when it comes to England, Wales and Northern Ireland.